I've come to the realization that investing is stupid, or at least the way I used to think about investing is stupid. Here's why. First, investing doesn't build wealth, it preserves it. When I say investing, I mean putting money into things like real estate, stocks, commodities, maybe even crypto, that sort of stuff. You're putting your money into these assets and ideally they will grow over time. Now, I used to think that one of the very best ways to build wealth was to buy real estate. The real estate would then produce cash flow, and that cash flow would be used to pay down the debt and then could be used to buy even more real estate, and you had this great snowball effect. And a lot of that's probably true, at least when you stretch out the time horizon long enough. But what's really building the wealth here isn't the real estate itself, it's the money you're putting into the real estate in the first place. It's not the real estate's often slow and gradual returns that are getting the ball rolling. Instead, it's the fact that you're actually earning the money to place into the real estate to start with. At least those initial earnings are a lot faster than the real estate itself. But over time, the real estate's probably gonna track inflation, maybe with a little bit more if you're in a decent area and things go well, you get growth in the area, you get some extra appreciation. But really, it's just preserving the wealth that you already invested into it in the first place. And if you introduce some leverage into that, you can try and juice up the returns that way, but now you're adding risk. But real estate, like many other assets, is primarily useful for preserving wealth. You're probably not gonna have exponential returns with a piece of real estate. You might get some nice returns over the long run, but really it's about preserving the wealth that you already have. This is not to say that real estate is bad, because preserving wealth is important too. But this brings me to my next point, which is that it probably doesn't make a lot of sense to focus on preserving wealth before you actually have a lot of wealth. Let's say you have a $100,000 portfolio. If you grow this $100,000 portfolio by 8% per year, that's $8,000 per year. Nice, but not exactly something to get super excited over. I mean, anyone would take that over nothing, but that 8% really isn't moving the needle with a portfolio of that size. Now, yes, I understand that that growth compounds over time, so the 8,000 may become much more than 8,000 per year, even just with that initial investment, without adding any additional cash outside of the investment itself. But the effects look really tiny compared to actually finding a way to earn an extra $50,000 or $100,000 to add to this initial pool. Or maybe you add much more beyond this. The point is you're adding a lot more money via active earnings to then have more to invest. And then once you have significant wealth, then those 8% returns really start making a big difference. So I personally would rather use my energy towards boosting income now rather than trying to increase my investment returns by a couple percentage points per year on my existing wealth. Which brings me to my third point, which is that if you know how to make money, you become your own insurance policy, and then you don't have to rely on your investments performing so well. Or put another way, when you know how to make money, you know how to create wealth. And then when you have wealth, it becomes a game of preserving that wealth, and that's where investments really shine. But much like investing in financial assets, investing into your own skills also has a compounding effect. Combining skills really is multiplication, not just addition. So if you know how to run a team and you also have some other marketable skill, when you put those two things together, it's a multiplication effect, so that the end result is probably a lot more lucrative than just adding the two skills together. And as a bonus, as you increase those skills, it'll be easier to hold a job with someone else if that's what you need or want to do. And you can use those skills to run your own business as well. Now, I have to say this. This is not to say that investing is always a bad idea. I still invest, even though I'm focusing much more on producing more income now, because there is value to having some defense lined up even before your portfolio is super huge. Plus, you're building your skills as an investor in the meantime, so that when you do have more wealth to play with, you actually have some idea of what you're doing ideally. What I'm really trying to get at is how to prioritize between investing and producing more income, because it's much more of a spectrum that's going to be different for every person. It doesn't always make sense to focus 90% of your energy towards investing, especially when your portfolio is probably pretty small. And you could instead be focusing that same energy towards producing more income to then throw into the portfolio. But whatever that balance is going to be different for every person. Every decision has a cost. So in conclusion, investing is stupid sometimes, just as not investing is stupid sometimes. But it makes sense to subscribe, always.